Hey, what's up, guys? This is me, Abraham. In this video, I'm going to show you how you can start trading stocks in the New York stock market. So let's go. First thing you need to know is buying a stock with a low price, then selling it with a high price. It's called longing or long, while the opposite is selling a stock high, then buy it low is called shorting. You're gonna tell me, okay, but I don't have anything to sell. How can I sell a stock while I don't have it? Now, the thing is, most of the brokers, when I say brokers like Robinhood, TdAmeritrade, any of these brokers that you have, Interactive Broker, even TradeStation, any of these brokers that you have on your phone, they will give you a stock that you can sell it and then buy it back low with the low price and then give it back to them. So you take your profit and then give back these stocks to them. So this transaction is called short or shorting. Now, trading types. We have day trading where you have to buy and sell in the same day, or swing trading, which means that you buy the stock today and you sell it in another day. The first step, as we all know, that to start trading, that you have to open an account with a broker so you can start trading. A second thing is you have to select a good broker. I recommend for the people who lives in the United States to use TdAmeritrade for the phone and Thinkorswim for the laptop. So these two applications, you can use the same username and the password and get the access, and of course, do the trading with these two applications. For the people outside United States, I would recommend TradeStation or Interactive Broker. Now, two types of the accounts that you have when you open an account with the broker. The first one is called cash account. The second one is called margin account. What are the differences between both? The first one is in the cash account, you can drop any amount in this account. Margin account, most of the brokers, you need to have minimum $2,000 in order to open the account. Some of them, they will ask for $100. Some of them, they will ask even for $4,000 or $5,000. I'm not sure 100%. I think Interactive Brokers, sometimes they will ask for $4,000. Second thing is in the cash account, the amount you use for trading will be available after 2 business days. It's called settlement, which means if you buy 100 stocks of Tesla today, and then the price is going up with Tesla today, you sold them, you sold the whole 100 stocks. Now, the amount that you have used in order to buy the 100 stocks of Tesla, you cannot use it today because it's not going to be available today. You have to wait for 2 days until the settlement for this transaction, and then after 2 days you will see the amount of the 100 stock of Tesla available in your account, and you can start trading again. While in the margin account, you don't have to wait at all. The amount you use for trading will be available immediately, which means you can buy 100 stocks of Tesla, then sell them if the price go up, and then buy another 50 Microsoft stocks and then sell them again. So the amount will be available immediately. The third thing, cash account, you can trade as many times as you want. There's no limitation. While in the margin account, if the account is less than $25,000, you can trade 3 times in 5 business days. And when I say 3 times, which means you have to do it within the same day. So if you buy 10 stocks of Microsoft today and then you sell them today, this is called round trip. But if you buy 10 stocks of Microsoft today and you sell them tomorrow, this is not a round trip. So in the margin account, if you have less than $25,000 in United States, I'm not talking about the people outside, because outside you can do whatever you want, it's fine. But inside United States, if you open the account, you have less than $25,000, you can trade only 3 times in 5 business days. So today you can buy 10 stocks of Microsoft, sell them today. Tomorrow you can buy um 10 stocks of Tesla, sell them also in the same day, and then after tomorrow you can buy I would say 10 stocks of um, Oracle and then sell them in the same day. In these three transactions that you have done across 3 days, you have to wait another 2 or 3 business days, and then it will open a new 5 business days for you, so you can start trading again, and you have 3 round trips again. Most of the brokers, you don't have to worry that much. Most of the brokers, they will give you a notification and they will tell you that you have one more round trip. If you cross this one more round trip, we're going to block your account until you put $25,000 in the account, or you wait 90 days until we unblock your account. Now, the next one is with the cash account, no margin or extra purchase power, while in the margin account, you have a purchase power 3 times most of the time, which means if you have $2,000 in your account, the broker will give you an extra money in order to trade. So you will find in your account $6,000. If you have $10,000, you will find $30,000. There is a specific equation for every single broker, so it's different from broker to another. The last difference is in the cash account, you can buy and sell, which called longing, like you buy low and then sell high, you make profit. This transaction is called longing, as we mentioned before. While in the margin account, you can buy and sell, do the longing transaction we've mentioned, and also you can do shorting transaction, which means you borrow the stock from the broker, then sell it, and then buy it back and give it back to them. So which means you can sell and buy, so you can do shorting. The next thing, when you open an account with TdAmeritrade, make sure that you check the option for real-time code. This is so important. Why? Because most of the brokers, when you open an account with them, they will not give you the real-time code, which means, suppose, for example, Microsoft stock price is $133. I'm just giving an example. $133, you will see it $140. Why? Because you have a delay in the quote. So be careful from that. Most of the brokers, you have to check an option called real-time quote. So you will get the price of the stock without any delay. This is really important. You have to take it into consideration when you open the account. Now, how every single day in the morning, as we know, at 9:30 a.m., the New York stock market will open at 9:30 a.m. New York time, of course. Now, I would suggest 45 minutes before the market open, you can check which stocks are moving quickly. They call it high volatility. Which stocks have high volatility, so you can trade it as of today. Now, why these stocks will have high volatility? Because maybe they have an earning report that was released. Maybe they have hired a new CEO for the company. That's why the stock is moving, like going up. And sometimes they will have bad news, so that's why it's going down, and all of these things. Now, there's one website I would recommend. It's called MarketChameleon.com, where you can check the stocks that has a good earning reports or like good percentage of change, like moving stocks, or bad also percentage of change. So you can check the gainers, for example, as you see in the presentation, and you can sort them. You can sort them just by clicking on the percentage CHG, and then it will sort all the stocks from the high volatility to the low volatility. Stocks with the high percentage change are the stocks you need to watch for today. Stocks with the high percentage in green are having either good report, good earning report, or good news. Stocks with the low percentage in red are having bad earning reports or bad news. 4 strategies I would recommend. Me personally, I'm following these strategies because you cannot trade stocks without having a strategy. So basically, you need a strategy. Now, for the good news or for the high percentage in green, I would say chances to long the stock and make a profit is really high. Why? Because we have the first scenario or first possibility that the stock might spike once the market open at 9:30 a.m. In this case, you don't trade at 9:30 a.m. exactly. You will wait for 2-3 minutes to double check like if this spike is real or is it fake, tentative. Once you make sure that the spike is real within 2, 3, 4 minutes, then you can jump in, buy the stock low, and then sell it high. So you go with the wave of the stock. A second possibility is the stock might drop once the market open at 9:30 a.m. and then spike again. So you will not do anything at 9:30 a.m. You will watch the stock, even if it has good news or good earning report, it will drop at 9:30 a.m. when the market open, and then you will wait for the drop to finish and it will pull back. So you will wait for the pullback to make sure that this pullback is real and it's not fake, and then you can jump in and buy, then sell high. Second scenario is the bad news or low percentage in red changes the chances to short the stock and make a profit, which means shorting, as we mentioned before, that you will start the transaction with selling, and then the second step is going to be buying low. So the stock might keep dropping once the market open at 9:30 a.m. So at 9:30 a.m., you will see the stock dropping, going down. You won't do anything. You will wait for 1, 2, 3 minutes to make sure that this drop is real and it's not fake. If it keeps it dropping, then yes, you can jump in, sell 100 stocks of the stock you're watching, and then buy when it goes even lower. And the last option is the stock might spike once the market open and then drop again. So at 9:30 a.m., you will see the stock, even if it has bad news, still it will spike at 9:30 a.m. You will give it 2, 3, 4 minutes for the spike to finish, and then it will drop again. When it will drop again, you can make a profit by shorting the stock. Risk management is really important. Do not trade or buy or sell anything in the first 3 minutes, as I mentioned before. Wait to see how the stock is moving. Second thing, if you see it's spiking, you can buy. But if you see it starts dropping after you bought the stocks and it's not going with your strategy, then 2% loss and then sell. Tomorrow is a new day. Once you see that you made 2 or 3% profit, sell and walk away with this profit. So don't wait. Don't be greedy and wait for more profit, because tomorrow again is a new day. So do not revenge the trade. If you lose, it's fine. You close your laptop, you continue your day normally. You don't have to keep trading just to revenge the loss that you got. Do not overtrade. Of course, you cannot keep trading because it's going to be a headache. So I would say like first 1 hour, 9:30 to 10:30, and then that's it. You don't have to keep trading all day because it's really headache. And most of the people, like professional traders, they don't do that. So tomorrow is a new day. You have so many opportunities in the stock market. You can't imagine how many opportunities. Every single day is more than 20 opportunities. So it's not the end of the stock market. You can wait for tomorrow. How much do I need to trade? I would suggest you need $3,000 would be more than enough for beginners. And you have to take into consideration that the first 6 months, you might lose $2,000 during your learning curve, which is fine. So out of the $3,000, you might lose $2,000 in 6 months if you follow the strategies I've mentioned. Or you might not lose, you might make a profit if you're like so confident and you take risk management seriously in trading. After 6 months, you should be able to start making profit and little bit losing money following the risk management psychology. You can use paper trading. Of course, every single broker, most of the brokers, they have something called paper trading, which is fake money. For example, TdAmeritrade, they will give you $250,000 as a fake money so you can trade. But the thing is, you can do longing, like you can buy low and then sell high, but you cannot do the shorting transaction, which is selling first and then buying second. I'm talking about TdAmeritrade. Some of the brokers, they will ask you for $5,000 in order to get the real quote, like that, without any delay for the stock price. In the paper trading, you can long again, but you cannot short. Risks management, it's really important. The first thing, you have to read this before you start trading so you can make sure that you're going to follow these important points. Trade once or maximum twice a day. You don't have to overtrade. Second thing, maximum loss allowed is $350, but in your case, it's a percentage, as I mentioned before. So it's 2%. If you lose them, you just walk away with the loss that you had and continue your day normal. You don't have to trade if the setup is not perfect. For example, if you see that stock is not moving with the strategies I've mentioned, you just leave it. You don't trade. Tomorrow is a new day. It's fine. Avoid first 3 minutes in the market when the market open. Focus on high cap stocks more than the penny stocks. It's just me. And when I say high cap stocks, which means like the stock that has a price $20, $30, $50 and above. The penny stocks usually stocks that has price less than $10. Usually I don't trade penny stocks, but sometimes I do, but most of the time I don't. Shorting is easier most of the time than longing, which means like selling or watching the stock dropping and do the trade while it's dropping and make profit out of it is, for me, in my case, it's easier for me. Trading has no hope or emotions, as we all know. Do not mix your emotions with the trading. Next, do not revenge the trade and accept the loss. Tomorrow is a new day. The most important thing, you enjoy your day regardless you won or lost. And finally, treat your losses as an expenses for your business. So even if you open your own business, of course, you're gonna have expenses like salaries, rent, any bills that you have for the business. So treat your losses as an expenses for the business. So don't panic because you lost money. So this is for trading for beginners. Hopefully this video is good for you, or a kickoff for you to start trading. And that's it. Have a good day. Thank you so much for watching, and see you in the next video.